about a 39% increase. The NII has grown by about 16% on a year-on-year basis. For the quarter, we have a net interest margin of 4.49%. Our fees also have seen a decent jump for the period. We closed this quarter with a fee of 725 crores as against 573 crores last year. The total other income is at about 910 crores. Total advances on a year-on-year basis, we've seen about a 12% growth, large growth coming in the corporate bank, in the CVC segment, commercial vehicle construction equipment. The home loan segment also has seen growth in this quarter. The capital adequacy continues to be pretty strong at 16.5% Tier 1 at the end of the period. We've seen a big jump in the current and savings account. The CASA at the end of the period now at 42%. In addition to that, we have the sweep deposits, which is at 7.3%. Savings average balances for the period, for the year, has grown by about 40%, and current has grown by about 25%. So all of that has led to the cost of funds coming down. The GNPA at the end of the period, we are now at 2.42% with a net NPA at 1.07%. Cost to income for this quarter at 48.4 with a ROA at 1.76. At the consolidated entity, we closed with a profit of 1,267 crores. In addition to the bank, other decent contributors were Kotak Mahindra Prime, which had 133 crores. The securities company, which came up with 85 crores, the insurance company with 68 crores, and the Kotak Mahindra Investments at 48 crores. Loan growth again in the overall consolidated entity. We now close the period with 1,57,000 crores of a loan book. Growth on an annual basis at 12%. Again, a healthy capital adequacy of 17.2% Tier 1 at the overall level. Our total assets under management across the group now at 1,33,000 crores. We've had decent growth in certain segments, noticeably the domestic mutual fund, where overall corpus has gone up by 50% plus, both on the overall number and the equity number. Net interest margin at the overall consolidated level again at 4.48%. We end with a book value of 201 rupees per share after these results. So those have been the broad highlights for this quarter. Open question.
Specifically on demonetization, what impact did you see on the bank net? If you could just briefly add.
I think the positive ones really are, to some extent, you're seeing on the savings and the current account deposits. Yeah, they've grown. If you saw, as Jeremy explained, 40% is the SA growth and 25% is the CA growth. So probably, 5% more than otherwise. So that's the incremental delta growth on these deposits. On the negative side, probably some of the asset growths, we probably sort of picked up momentum somewhere around October, mid-October, late October. That slowed down. So the asset growth is relatively muted.
Sir, on the full banking side, we have seen some amount of impact of what we saw, especially in November and December. You were a few of them, who were able to affect too. So, what would be the prime reason behind, 2-3 reasons that you see that you have fared relatively well as compared to the other banks?
I think primary reason why it's been better really is more, I would relate it to post-merger benefits now, really. I think for the first 1.5 years, we were going through the merger pangs. Now the merger process, as you see it closes out, as integration falls in place, you start seeing the benefits of the merger. Like again, Jeremy explained, this quarter, for example, the corporate piece has done pretty well, the wholesale piece. Now, wholesale piece, we sort of integrated right in the beginning. So it's been steady, 1.5 years of wholesale bank in place. So you're seeing the benefit of that now. As you go forward, we sort of integrated the retail piece the last about 3 months back. So next quarter onwards, hopefully you should start seeing the benefits of the retail side. And all of this also is manifest. For example, if you see the expenses, employee cost, other operating costs, despite the growth, they've sort of remained flat. All of those are signs of consolidation after merger. So what you see this quarter is probably far more to do with the merger sort of falling more and more in place rather than positives or negatives out of demonetization.
Asset quality has also looked.
Asset quality is pretty okay.
Yeah,
Pretty
it has
okay.
looked
Yes,
stable.
pretty
So
okay.
going
What we'd
forward-
expected right in the beginning, it's not been worse than. To some extent, you're helped because of the new temporary relief which the RBI gave, the 60-day and the 90-day, but that's very small, really.
So if you had taken that leeway,
It's a marginal increase, really. Yeah.
When you look at in your presentation itself, the different splits, corporate banking is the increase of 10% sequentially. The only reason, that you've given that synergy is now being.
Yeah, they've all fallen in place. Whereas the retail bank in this quarter actually was struggling, trying to meet customer commitments and keep customers, happy really, and fighting the
If
demand.
it wasn't for demonetization, you're saying with the synergy, the growth would have been significantly more.
Well,
than 10%?
retail bank you will start seeing from next quarter onwards because retail bank actually integrated the last. The integration was really complete in the June quarter. So you'll start seeing that going forward. Right?
There's actually been contraction in some of your businesses, agri.
Yes. Contraction. That's more of a demon effect, really. Yeah. So
That's-
the asset growth has sort of been muted. Yeah.
Because it's skewed, the growth is skewed very heavily towards that.
Yes. Also remember last year was we were in full integration, so there were costs which were there, provisions which were there, arising out of the merger really. So all of those are off now.
Sir, corporate, where is the demand coming from? Refinancing, CVC?
In corporate, wholesale. Wholesale is all over, but it largely is refinancing. Yes, there is no growth as such.
and the sectors you said that were impacted because of demonetization, agriculture specifically, are they beginning to come back?
Not
Now in the
yet,
last-
really. Not yet. Not really seeing that yet. But probably on the more urban side, businesses on the urban side, you're seeing some of that start to come back.
So how much of your cost of funds cooled off as compared to?
How much cost of fund?
Yeah, come down.
Well, actually, we look at it more in terms of NIMs.
Okay.
So the NIMs are marginally better. So there is an advantage which is.
Look at it quarter on quarter, it's a one big change.
Okay.
That's all.
Sorry?
What has led to the margin expansion? I mean, how much?
Marginally better.
No, I said what has led to the NIM expansion?
Well, there was a reasonable increase in savings and car deposits, really. So that itself reduces your cost to some extent. So even though on the lending side you suffer, you gain more of that on the deposit side, really.
Most people expect the stress to continue in the rural sector, more so because the IMD has forecast a below normal
Yeah.
monsoon for the coming fiscal. So how do you read this? How will it impact your retail book? Because you said that this is something you expect improvement in, but considering this as a whole, what's your outlook overall?
So you're talking of retail, non-urban, basically,
Yes.
retail, rural.
The agri and
I'd say, see, for us, retail, rural is broadly two parts of business. Yeah, one is things like tractor finance, which really does well on the incremental demand side if the rainfall is good, really. Similarly, on the recovery side, it does well if the harvesting is good and the pricing is really good. So that's one part of it. The other part of business for us on the rural side is SME, food processing units, logistic units, all of these which are non-urban based. Monsoon impact is more in the former, not really so much in the latter. But this year, I think the impact of demon has really been on the SME side in the beginning, really. Tractor and all have not really got impacted so badly, really.
What
So
would
let's
you
see.
Say then your guidance for credit growth for this year would
for the year. That is just this quarter.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNow Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.